Welcome to Amazon Legends, where we have real stories about making it big on Amazon. Our guests are CEOs of large companies and entrepreneurs who became power sellers, also providers specializing in helping sellers, aggregators that acquire sellers, and former Amazonians will give us an insight from behind the scenes. Here is your host, Inaccuracy.
Welcome to another episode of Amazon Legends. I am so happy to have my next guests because I have two guests today. But more important, the company itself is one of the, if not, frankly, as far as I know, there's nobody else. This company I've known for many, many years, and I've become a fan as soon as I discovered them and everything they do. And finally, I'm so happy that they decided to come on Amazon Legends and speak to the audience and share the knowledge that they have. And it's a great company, and it's something every Amazon seller must have. And it's one of those things that you can't live without. And the company is A2X Accounting. So as you all know, probably, they provide the solution that bridges the gap between those complicated Amazon bi-weekly payment reports, the settlement reports, and the accounting. So you know exactly what you're doing. And they bring it all together with a couple of clicks. You get everything at your fingertips. So that's what A2X does. And I'm so happy to have one of the leaders in the company who studied accounting and marketing. It's an odd combination. People don't usually study those two together. And then she went into digital product development, and she spent time. And she's one of those people that, you know, people pile on all kinds of things and then wears so many different hats. And that's what she's done. And then finally found her way to A2X. And A2X at the time was building this system that she was impressed, which did everything that she liked and studied. So she joined the company. She's been there forever. And today she is the partner marketing manager. But, you know, this is in addition to many other roles that she has in the company. And when she's not working, she loves vintage shopping and fashion and cooking. So with that, everybody, meet my guest, Ellen Main. Welcome to the show, Ellen.
Thank you so much, Nick. I'm really excited to be here today.
Oh, you know, you and I have spoken a few times, and I want to tell all my listeners and viewers, you're joining from New Zealand. So
Okay.
this is a big deal. I think we're breaking all kinds of records today. So you're not joining alone today. So we also have another guest from A2X. And my other guest from A2X has been a corporate accountant for 2 decades. Those who are watching instead of listening will never believe that she spent 2 decades in corporate accounting before joining A2X. And she's been an A2X since almost the beginning. And she's been part of the growth that she's been driving. And, you know, after spending all that time with corporate stuff, she decided, I'm done with this. I want to do my own thing. And in the process, she found her way to A2X, and she was impressed with the system that they were building and the purpose of the company. And she loved it and joined, and she's been there ever since. So she leads the customer success team, and she's been the architect behind building the whole, driving the growth and the customer success operation. And when she's not working, she also loves animals, and she's joining us from Australia. So with that, everybody, meet my guest, Iona Bird. Welcome to the show, Iona.
Thank you, Nick. It's really great to be here.
Oh, I love the kind of impact your company does. And when I first discovered A2X and I started using it myself, and then referring different sellers to it, and usually I would be involved in setting up. And you know, one thing immediately I noticed is your support is like, it's fairly prompt. even though there's this whole distance, it's fairly prompt, and it's always ladies. It's always ladies, and so that's the first thing I want to know. How many men? What percentage of the team is men, and what percentage is women?
Overall, it's a great split. Overall at A2X, we are, close to 50-50, but we're a bit higher on the female side, which is a nice representation. In the CS team, you're right. We are heavily represented by females, but we do have like a number of males on our team in all different locations. So we've got people in US, Philippines, Canada, Australia. So we've got men around there. But as I say, in customer success, it sort of is heavily concentrated with females. But throughout A2X, it's a really great, nice split between genders.
So for my listeners, I want to set up the conversation today. So A2X handles all the accounting related stuff and takes away the burden of dealing with complex numbers. So we're going to talk about numbers, but what I want to do is I want to put this subject on the table on every seller's radar screen, because selling on Amazon is getting more and more complicated, more expensive, and at the end of the day, you want to make numbers your friend, and numbers have to tell the story and the performance of your operation. And without getting accurate numbers, you don't know what you're doing. So that's why A2X or something like A2X that tells you accurately what you are doing and whether or not your operation is making money and your inventory value compared to your whole operation is healthy and things like that. So we're gonna get into that. But what I want to do is, Ellen, I want to start with you. First, tell us, why is this so important? Why can't this be done in a simple way with Excel or whatever? Because at the end of the day, it's what you sold and how much you bought, and that's pretty much it. I mean, I'm simplifying, obviously, but give us at a high level, why is Amazon accounting different and important?
Yeah, for sure. So Amazon accounting is a lot more complex than traditional retail accounting or any kind of other accounting. And that's because, so with, say, a brick and mortar store, all of the transactions and things that are occurring happen in the bank account. So as a business owner, you would be, paying your rent or, making a sale, and there'd be a clear tie in that transaction. You'll say, all right, that's where the money came in and that's what it was for. With Amazon, so obviously Amazon's amazing because it handles so much of that all of those operational activities. But because of that, they charge fees. They charge lots of different types of fees. And all of these transactions occur within Amazon, and then sellers are paid a net deposit into their bank account. Now, if you're just to look at that bank account number, it doesn't actually give you a lot of information about what has gone on. And it also doesn't match your revenue figures. So it's not what you actually sold, that's taken a whole lot of other things. And Amazon tracks over 400 different events before they make this payment into your bank account. So it's very different. And the complexity doesn't actually stop there. So all of these these settlements, they can span, they span multiple weeks and they can span multiple months. So if you want to do comparisons on how you've gone month to month, if you sell in different regions, you've got different tax types. So there's all these kind of complexities that are opened when you do sell on Amazon. And you need to take the good with the bad. And so that's kind of in a nutshell why Amazon accounting is different to retail accounting or other accounting.
Yeah. I mean, what I heard you say is something so significant. I'm going to just put it in different set of words. When you sell in anywhere, whether you do wholesale, they write you a check. You cut an invoice, they write you a check. Or you sell in a retail store, you collect the cash, put it in the cash register and deposit. But when you sell on Amazon, the cash you receive is not your sale, right? It is the net deposit that is the net of a bunch of expenses deducted from it. And therefore, you have no idea what your gross sales are and what your expenses are just by looking at your deposit. And therefore, you have to figure out, okay, what was it that I sold and how many units and what was deducted from it. And that is where A2X comes in, that to simplify that process, because I've been in the Amazon space for about 20 years now, and there is no shortage of new expense codes appearing, right? There's always something new, always something new. So there's no like set up once and then forget it. There's always new expense codes because they are also changing their operation. They're charging now recently, as we record this, recently they introduced new FBA fees. So there's always new fees coming in. So you won't know whether you're making profit or not just by looking at your deposit, right? So that's the fundamental reason. Would that be right?
Absolutely.
Okay. So Iona, I want to turn to you as the person who is dealing with sellers all the time. When they sign up with A2X and then they are looking to get organized, what is the biggest misconception they have?
Probably exactly that. They don't have full understanding of what makes up that settlement deposit. They don't have clarity on their full income, expenses. They don't have a good understanding of the inventory side, and therefore they don't know what's being reimbursed and what's not. At the end of each period, that's the biggest part of knowing, how you're doing with Amazon, is knowing how much stock you have and where it is and how well it's tracking. And so A2X gives them that information, at the click of a button at the end of each month. The other thing that's super important is the reserves. So a lot of sellers don't really have a grasp on Amazon withholding some of their funds. They also don't sort of see the reserve as being withheld after the whole settlement has been produced. And so therefore, often we find sellers haven't been accounting for this receivable amount of money, and so they don't realize at times that Amazon has got all of this money being held, until they release it. And so, yeah, there's that as well.
Yeah. So, you make a very good point. They are in the greatest business, right? First of all, you have to advertise in order to make a sale. And when you eventually make the sale, you have to pay 15%. And in addition, you have to pay them to do the fulfillment. Okay, these are all value. They're delivering value. But when it's all said and done and you make those few sales, at the end of the 2-week period, they turn around and say, you know what? We owe you $100, but we're going to send you 30. We're going to hold on to the other 70. So it's the best business. So, but why is this important to know is because if you just take that $30 that came into your account and say, okay, this is what my sales are, you will have no idea because it has expenses in it, it has the reserve in it, and reserve being the money that they are holding on to. So Ellen, tell us, why do they hold on to this reserve? What's the purpose of it?
The reserve for holding on, it's kind of like a bond, isn't it? Until they kind of prove themselves as sellers. Is that what you would say, Iona?
Yeah, so it's sort of like a security. It could be initially as the seller starts out so that Amazon can get confidence in the actual seller, or maybe there's a situation where a seller has a really large number of sales really quickly, and so Amazon will then withhold a portion of that just in case there's some sort of return issue later on. Yeah.
Right. Right, right. I mean, I'm in several groups, and recently there is a conversation going on about increased return rates. So, especially in clothing category, I'm hearing return rates as high as 30+%. So it's a big deal. And of course, if you're buying something that needs to be tried on, you don't know which one is going to fit you best. So you buy multiple sizes, and then the ones that don't fit best, you return it. So I guess these are natural, but uh, at the end of the day, they look at the seller and they say, okay, they made so many sales, but we don't know if how much of it is going to come back. And by the time they come back, if we pay them everything and there is no money, being small business, to recover it, they don't want to be exposed. So that's why they hold on to this reserve. Okay, so we understand why they need to have Amazon accounting. So when they are doing their accounting, what is the right way to structure that so that they get to see their operation in terms of its performance? So since you are the corporate accountant, Iona, you want to tell us what's the best way to structure that account?
Yeah, sure. So thankfully with A2X, we have a set of default accounts that we provide to customers that maybe that are just starting out or maybe setting up their accounting system for the first time. And so we will create the ledger accounts that they need in their accounting system, say for seller fees and charges, FBA fees, advertising, and then reimbursements, income, refunds, shipping, all of those things will be separated out. So we sort of provide the accounting structure within A2X without you sort of needing to know that side in detail. But obviously the biggest part with Amazon accounting is the stock. Amazon accounting is obviously very important, cash flow and all of those things, but maintaining stock levels at Amazon is probably, as an Amazon seller, would be seen as being more important because there's things that can happen negatively if you actually run out of stock in Amazon. And therefore, I think the A2X structure is to provide the data that people need to be able to get that right from the start. So again, we provide that inventory report at the end of each period so we can tell people what they've got and where. And then we also, provide all of the default accounts that are required. And we pretty much have them sending accounting data across to their accounting system at the click of a button within minutes. And our system automatically separates data. So with Amazon, settlements often cross month periods. And obviously you want to have the right accounting in the right month period. And so our system will separate that for sellers and make sure that is easily reconcilable, but also accounted for in the correct month period. So structure-wise, our default accounts are what I would recommend. And they give the best breakdown and they provide the best accounting information, and it can be used for management accounting, financial reporting, and everything.
Yeah.
Should I just add to that, Nick?
Yeah, go ahead.
When I think of structuring accounting, I also think of what is going to give the Amazon business owner the most visibility. And I think that's where it's really important just to remember to separate everything out. So as Iona was talking about, we have these default accounts. What that is knowing what your top line sales were for every individual SKU, knowing exactly what FBA fees you were being charged. And Iona mentioned about inventory, it can go the other way and you can start having your inventory in these warehouses for too long and then start getting charged even more fees, which completely disrupts your margins. So I think when I think of structure, think of what will provide you the best visibility to run your business. And that is definitely separating everything out.
Yeah. So what I want to do, ladies, is in this conversation, people listening, I want them to be able to take away the formula we give them and then set up their account in a way that will be the most meaningful. So I want to tell you what I do for what I did for myself and also for my clients, and you tell me your take. So first of all, I don't really pay attention to your default accounts because you have so many of them. So what I do is they are extremely important, but here's what I do. As far as I'm concerned, as a seller, as a business, these are the line items that I care about. My gross sales, top line. I want to see the refunds under it because I want to track percentage of refunds compared to the top line, because that's an important metric. But also, I want to see the promotions, because what happens is, I see this all the time. There's something called unit economics. So as somebody sits down and says, okay, we're going to sell this item for $49.95. And we buy it for, bring it from Asia. We buy it for, let's make it real good business, $9.95. Okay, so great margin. We're going to pay, let's say it's a small item. We're going to pay $6 for FBA. And we're going to pay 15% on the $50, $49.95 to Amazon. So this is how much money we're going to make. Great numbers. Everything is good. Okay, let's go to work. Well, guess what they do? They turn around and they say, okay, 15% discount here, 15% discount there. So suddenly Amazon reports the net, right? I mean, they report, of course, the gross, and they show the promotion. So suddenly, if you ever post your net sale, net of discount, you don't have your unit economics. So what I care about is right above the expense line. I want to see gross sales, promotions, refunds. Then that gives me net sales. Then we go down to the cost. Of course, you have cost of goods sold. That's the purchase. That's a line on its own. And I always track that as a percentage of the net sales. Then comes the line items, and that's where it gets ugly. That's, as they call, the bottom of the P&L. This is all I care about seeing there. First things first, I want to see item-based FBA fees. I want to see Amazon commission. I want to see advertising. I want to see storage and everything else. That everything else, as you know, God knows how many line items they have. So what I do with my clients is I set up their accounting with these, so 3 line items on the income side, gross sales, promotions, refunds, 5 line items on the expense side, and then I map all your default accounts to those. So when you push the button to generate the invoice, it goes straight to accounting. It all falls into those buckets. And then immediately I can see the percentages. So that's how I usually use it. So tell me your take on this, and some maybe things that we are overlooking, or some things that maybe even made better. Alan, you want to go?
Oh, I was going to let the accountant jump in. I will quickly say that is the beauty of A2X, is that you can decide exactly what you care about. Everyone has different priorities. Obviously, gross sales, COGS, these are important to everyone. But you can choose exactly kind of what FBA fees and where you want to put them. What would you say, Iona? Is there another way you would structure that?
I think you've pretty much, your system is like our high level. We just provide a whole heap more breakdown for those that might need some, extra categorization or different mapping for some unknown reason. But your system is actually, like, I would recommend a high level system like that too, especially if people are sort of starting out. That's absolutely ideal. It makes the focus is on the right things then, and as they grow, they can grow their focus. If they want to see some more detailed things, then they can do that. And with A2X, like the way you're currently guiding people to map, it's so easy to just jump in and change that if ever you need to down the track.
Right.
You still have all the comparable data with the accounting systems now. You can do recodes if you find down the track that you needed more details. So I think it's perfect. I think that's that is a high level default, so I would say.
Yeah, the reason why I go about it that way is because everything that I mentioned in those 5 line items, expense line items, so Amazon commission, how much is that? 15%. There are some categories it's 12%. If you see that spike, clearly there is some miscategorization happen on some listings. See, that's a red flag they can dig into and then figure out. On FBA fees, when we create those unit economics, the best thing about Amazon fulfillment is it's fixed per SKU. Good luck getting a fixed cost for your own shipping if you were to do fulfillment yourself. So this is fixed. So because it's fixed, when you create that plan at the beginning, you say, okay, we're going to sell for $49.95. We're going to pay $6. So that's about 12%. Okay, great. Well, if you don't see 12% in your accounting, then again, something happened. It's either misaccounted or something happened, Amazon changed fees or whatever the case is. And storage is a big deal. Storage is supposed to be tracked because it can be managed much better. But if you don't even measure how you are doing, so that's why I like to keep that separate. And of course, advertising is the huge part of it. Yeah, ACoS calculations, TACoS calculations. So you want to see that separately. And frankly, for everything else, I don't really care. What I do is I say, combined, as long as they are less than 5%, that's all I care about. And that's where you have all these reimbursements, the reimbursement fee and the clawback fee and the clawback itself. I mean, it gets so complicated. So that way, it's a good idea to cut all that clutter and then just, your system will just map it to wherever you want it to go, and then you can see your numbers. So that's the part that I like the most. The next thing that I want to talk about that you mentioned just a little bit, but it's such an important part in my book, needs attention. That is posting your sales at SKU level rather than as lump sum income, right? That's another one. So tell us a little bit about why that is much better, and then how would you do that? Because when Amazon sends that settlement report, of course, they have the SKUs, but if you're using Excel and whatever, then you can't really get that breakdown as easily unless you're doing all kinds of pivot tables and everything else, right? So who wants to go? Go ahead.
Yeah, sure. I'll jump in. I agree. Like and as you grow, your spreadsheets will crash, and that system will you'll grow out of that system very quickly. A2X has the beauty of being able to collate the data, but then also break it down in the way that suits the customer. And so your method is our sales by SKU method. And so once we get the data in, we then break it down a little bit more detailed from our high level breakdown. And we basically provide gross sales at a per SKU level, and refunds and promotions as well can be done that way. And so at least then you get a bit of an idea about your profitability by SKU, as how products are going at an individual level as opposed to the high level. And it's super important and super helpful. There could be, especially with sellers that have got maybe new sellers that are starting out with new products, and they really need to have a good handle on how well those products are going at an individual level. Or maybe a seller that's got more products, a larger number of products, and one of those products is causing them to have, worse numbers than they could have, and they wouldn't know if everything was all consolidated together. So that way provides that clarity for sellers, and you can get a good idea of how each product is going individually.
Well, the other thing that is always hard is when you're making a sale on Amazon, obviously you assign the price when you create the listing, but that price is not fixed. In fact, it's encouraged to be changed from time to time, because I have a guest who's had his appearance on my podcast actually twice so far, that it's designed for private label sellers, and his philosophy is very simple. It says, what is in your 100% control is the top line, because you're never gonna reduce Amazon commission, you're never gonna reduce FBA fees, you're never gonna reduce the advertising unless you become really efficient. But your top line is 100% in your control. So he advises people to follow the trends, and based on the trends, incrementally modify the price. Ideally, increase it, sometimes decrease it. But his example is very simple. If you have 5% fluctuation in your top line, you have 5% extra added to your bottom line. So that's a huge deal. So that's why he encourages changing the price regularly. Of course, so when you change the price over time, these unit sales are coming in at different price points. And at the end of the settlement period, when you produce that summary, okay, I sold so many pieces of this, so many pieces of that, you can't have multiple prices. So you need to really harmonize everything and then produce a summary of this is what has been sold, and this is the average price point. So these are all things that I understand your system does, and then it just spits out the invoice, right?
That's right. Yeah. And you're 100% correct. Your top line is definitely the most important. If there's no performance there, then whatever comes under that is not going to perform either. And so, the more detail you can have in each of your products, and especially as you say for trends and analysis and so on, without that, you're sort of just flying blind and hoping that you'll be making money at the end of each period, as opposed to knowing exactly where you're sitting in that way. Yeah.
And then also, of course, the promotions, the discounts, and they also affect the price point. So all that gets taken care of. So, Alan, I want to move on to something that I always advocate for, and that is the inventory management. So I'm not talking about knowing how many pieces you should have in stock. I'm talking about inventory accounting. So my favorite example is this. If you made $1,000 in sales, you bought that $1,000 worth of merchandise, right? So, and then let's assume that you paid 20% of the sale in buying it. So 20% of that is $200. So you've got $200 worth of inventory that you had to have in stock at the beginning of the month in order to make that $1,000 sale. So, of course, you don't want to just sell it one month and then you're done, right? So you have to have inventory to continue the sale. So that means you need to have at least 2 months of inventory at the beginning of the month to make that $1,000 sale. But it never works that way, because you're never carrying 2 months worth of inventory. You're carrying more. So in this example, which is a very healthy scenario, 20% of the sale is going to purchasing the inventory. If you have 4 months of inventory, which is usually the lead time for people to order from their manufacturers, that's $800 already. In other words, before your Amazon commission, before your FBA fees, before your storage, before your reserve, before everything else, you've already spent the money on the inventory you have to have in stock. So therefore, inventory accounting is the most important in order to determine the health of your operation. So how does a seller stay on top of this?
Yeah, so I will let Iona jump in a second with this as well. Again, she's our accountant. I think this is why as well, accounting is just so important to be all over, right? So you've got the cash flow to be buying inventory. And I think this also leads to one of the most common mistakes we see sellers make with their accounting. And that's when they're actually they're expensing their inventory when they purchase it, when they need to be expensing their inventory as they sell it. So once they've got that inventory, it needs to go onto the balance sheet as an asset, and then they expense it as they sell it. But Iona, I'll let you jump in because you're all over this kind of stuff.
Yeah, sure. No, I definitely agree with what you've said. It's super important, and there's a lot of things that go along with it. Like with Amazon accounting, like I said earlier, if you run out of stock, it's not just like you've run out of stock and people are waiting until you get it back in. You've sort of lost a whole heap of ranking, and there's many things that go along with not having stock managed in that way. And yeah, as much as that top line is important, it's the second piece. You can't have a top line if you don't have stock to sell. And so the biggest thing of Amazon selling is actually having stock and having the right stock and being able to analyze it in the right way. And so, yeah, like Ellen said, accounting for inventory in the right way is definitely beneficial to the business and for management accounting. And like you say as well, it doesn't always happen like clockwork. And so, you might get stock at a certain rate today, and the next time you buy stock, you might get it at a lower rate. And so you need to consider all of those things that go hand in hand with the fact that you actually get to do Amazon accounting because you've sold products.
Yeah. I have a question for my listeners. Are you experiencing cash flow challenges with your Amazon business? Well, silly question. Who is not, right? So let me introduce you to Viably, a unique solution tailored for Amazon sellers and e-commerce enterprises. By connecting your Seller Central or Shopify account, you can promptly access funding along with a variety of financial tools, all for a flat fee. It's as simple as that. And for my listeners, they are offering an extra $1,500 in funding for eligible applications. Start your quick and easy application today at runviably.com/legends. And that's runviably.com/legends. Well, I mean, this kind of ties back to that SKU-based accounting rather than just posting it as a lump sum. So you cannot have inventory accounting without posting the sales to individual SKUs. So that way you are kind of covering the whole spectrum of everything that you need to be tracking. What are sales for each SKU in terms of dollar value and also units sold. And then on the other hand, how many units do I have in stock and how many units have I sold? So that is all key. And of course, it comes down to structuring. But there is one other thing that I want to mention because Ellen mentioned it very briefly, but it's so important. A lot of sellers, when they buy the merchandise, the shipment arrives, and then they have this purchase invoice, and then they post that to cost, right? And it's an expense for them, right? That's absolutely the wrong way to do it, right?
Yeah, exactly right. And it's definitely a common mistake. And COGS is usually your largest expense. So you do want to be expensing those as you sell. That's why it is called cost of goods sold. And then also tying back to what you were saying before around, splitting things out by SKU. I think that's also why it's really important to understand your profitability on each SKU, because you're essentially giving up cash to buy that inventory. And should you be doing that for a SKU that is not profitable? Could that be better invested in another line? So these are all kind of things to consider and why understanding your accounting is so important.
Yeah. I mean, let's break that down. So for those listening, so they can use this as a model. So first of all, when you buy inventory, it arrives in your warehouse and you got the container or whatever, and then you got the purchase invoice. That is not a cost. It's an asset, right? It's just like buying a car, and it sits on your books as an asset. In fact, let's imagine a scenario where you've got a container full of consignment arrived and you put it in your warehouse. There is demand for it. It's obvious it's going to turn into cash, but not yet. You can, in fact, go to the bank with that and say, can I borrow money against this inventory? And they will lend it to you. But if you post it as cost, you're going to be in a huge loss, and nobody's going to lend you money. So this is all about a function of the accounting. So when you have your purchase invoice, you post it to your books, it has to sit on your balance sheet. So I don't want to get into the debits and the credits, but when it's in balance sheet, it's an asset. But when you make a sale, each sale generates that revenue at the cost of the unit that's sold, so that the cost of that unit needs to be transferred from the asset into the cost of goods sold, and only then it needs to appear, right? So that's the nature of the numbers. And how does a seller handle that changing from asset to becoming a cost of goods sold?
With your recommended method, you're sort of relying on the accounting system to do some of that work for you, which is great. And you're right, the reason for doing it is everything you've mentioned. And another important reason is so that you can really have a good idea of how the business is running on it each month. Accounting for the stock in one period would mean your profit and loss would look terrible, and then the next period it would look like it's absolutely amazing, which is inaccurate reporting, and therefore that provides a smoothing out process is sort of what we call it there. But when you're using an accounting system, and A2X is breaking the data down on a per SKU basis, setting up a SKU in the accounting system is saying, I want to track this particular SKU. It costs me this to purchase this lot that I have on hand right at this moment. As I sell it, costs it out for me. And so as you purchase that stock, you enter the stock into your accounting system so that the accounting system knows what you've got. That goes against the asset account. So that's that process where it starts automated for you. Basically, you're saying, I've got 50 of this SKU now. So the accounting system goes, okay, I'll put that 50 value into your asset account. When you sell that SKU, I'll deduct it out of your asset account and I'll cost it out to your cost of goods sold. And then your profit and loss will be a true reflection of your top line and what it cost you to get there.
Yeah. So the vehicle in this that facilitates that accounting to be accurate is the total number of units sold in each settlement period at SKU level. And that's where your system is able to take all those line items and the transactions and then consolidate them and then spit out that invoice. So it looks like a seller just made a big sale to so-and-so, and this is how much they sold it for, and this is how many units they sold. And then whatever that number of units is, it gets automatically depleted from the asset account that you have. And the other thing that I think it's worth mentioning is that asset account is a balance sheet item, but it is also a stock item. In other words, it sits as dollar value on your balance sheet, but it sits as quantity in the inventory system. So that's how they kind of come together, right?
Yes.
Yeah.
Yes.
I always think of an asset as like especially a current asset, how quickly can it generate cash for your business? And once it's generated that cash, it can't generate the cash for your business again. So it needs to be taken from there. It needs to be expensed. And that's why A2X is amazing, especially for Amazon sellers who are just starting out, because it will do that for you automatically.
Yeah. So, okay, so we covered the importance of Amazon accounting and the difference about it. We covered how to deal with all those hundreds and hundreds of different line items. We discussed inventory, we discussed SKU. And there is one more thing that I want to discuss and put it on the radar screen for sellers. And then you tell us how to deal with that. And that's sales tax. So I knew you were gonna laugh, Ellen. So this is a complicated thing. So thanks to the Supreme Court of the United States, they made a decision in 2021, September of 2021, and they said, okay, every state now can go after anybody who makes an online purchase. Doesn't matter where the purchase is coming from. So I just want to, from business owners' standpoint, I want to put this out there. So first of all, if you are selling exclusively on Amazon, this is a non-issue. Don't even think about it. Forget it. It's a non-issue. You don't have to do a thing if you are just selling on Amazon. But if you are selling on Amazon and on your website and on Walmart, and also you are doing a little bit of wholesale on the side, and you are obviously selling to different states, now you've got a situation, right? So tell us, Ellen, paint the big picture for us on this. And then Iona, give us the nitty-gritty. How does a seller deal with this situation?
Yeah, so I think when it comes to sales tax, this is why we actually really recommend Amazon businesses do work with an e-commerce accountant because they really understand this, right? And there are so many different kind of rates depending on where you are. So from when I've been working at A2X kind of 6 years ago, actually a common mistake Amazon businesses would make is there was sales tax recorded in those net deposits, and they were then recording that as income. So they're essentially putting sales tax down as income, and it needed to be a liability, something they owed. So A2X would always take all of the sales tax and put it into one liability account available for separate filing. Iona, so correct me if I'm wrong here. I do feel like sales tax sometimes does slip in, or has Amazon really nailed down that process now?
Yeah, definitely. The marketplace facilitator arrangements that we have now in place have made things a lot easier, without a doubt. A lot of the grunt work is sort of done for sellers now, with the marketplace facilitator taxes being withheld for them and remitted for them. But I think what Nick was touching on there is the whole nexus side of things. When you are solely Amazon, you can confine that, and you are pretty much automated in a lot of ways. But when you branch out of Amazon and you like any of those options that Nick mentioned, you can then get into a situation where you have nexus in certain states. And so that sort of relates to the link that like a business has in a particular state in the US, where it obligates the business to, collect and remit taxes, but report on those taxes as well. And therefore it can, definitely make things a lot more tricky when you're coming to the sales tax accounting side of things. And that's where obviously people like yourself, Nick, and our accounting partners are super helpful. And yeah, A2X accounts for all of the sales tax. We allocate sales tax amounts to a liability account, so sellers will always know the overall ins and outs. So what was collected, and then also what was remitted if they want to see that data separately. And then obviously when it comes to the actual state level nexus and filing and so on, yeah, most of our customers will work with their accountants and get that side done.
So the first thing not to do is Alan, what you mentioned, by the way, there is another version of that. In other words, Amazon, if you are doing your own shipping and that your state is not in on the list of those states that Amazon collects sales tax for, Amazon will collect sales tax for you and then pay you what they collected. Then it's up to you to pay that to your state government as the sales tax on your return, monthly return, quarter, whatever the frequency of your filing is. But one common mistake, because it all comes lumped into one net deposit, right?
Yeah.
So you may actually post that as income. Well, what happens next is somebody knocking on your door and say, hello, we understand you've been collecting sales tax. Now you owe us. Now, they don't, you're not out of pocket in that sense. You've already received it. You just misaccounted. You may have, in fact, paid higher taxes, income taxes, because you declared more income than you should have. Okay, you can get that tax back. That's no harm. But they're going to charge you penalty and interest. So this is serious. The other thing that does happen is when you set up your account, you decide whether you want to collect sales tax or not. And it may be a state where it's not on the list of those states that Amazon collects sales tax for, but it may be the state you are in. And then you check the box and say, okay, I want to collect sales tax for all sales to, let's say, Wyoming. And Amazon will collect that. But if you haven't registered with the state for collecting sales tax, but you check the box, you'll be receiving cash without having to declare anything. In other words, you're flying under the radar. So if that ever comes out, because it's so easy to check a box and start collecting sales tax, but it's not as easy to go file, get a sales tax ID and blah, blah. People neglect. So the next thing is somebody is going to come after you because you have been collecting sales tax without actually being a taxpayer.
It's frowned upon. Yeah.
Yes. So, this does happen. So this is all about selling on Amazon. But what Iona said that I want to clarify that you called Nexus. So the term is, do you have Nexus in that state? All that means is, are you going to be liable for sales tax in that state? So what determines that is nobody knows, as specific as it can be, as a general rule, because it's different for every state. Some states are extremely aggressive. California, for example, they will come after you. I've heard horror stories, but it's never easy. In other words, they put this whole system in place where doesn't matter what you do, you will very easily, you will qualify to be responsible for sales tax. So that's what will then give you Nexus. And that means that you need to now know how much you've sold to that state, how much you collected, what are your total sales. So because you need to show the taxable sales, non-taxable sales, and all that stuff. That's where it gets complicated. So this is not something you can do by hand, definitely. And but it is only an issue if you're selling through other channels than just Amazon, right?
You can also trigger Nexus in a state if you store inventory there. And you are right, it varies state by state. So definitely work with an expert when it comes to sales tax. A2X will help facilitate, but that's our advice.
I've been watching this for a long time, way back before the Supreme Court thing. But when finally I watched the hearings, these states, they make so passionate arguments because they're all hungry. They all need cash. And this is something that they've been complaining about for years. And finally, there is sales tax, unfortunately. So you have to account for it. And so that's why my recommendation to sellers who are just starting out, it's so tempting and easy just to put up your website and make sales. Don't bother. Don't do it, because for the few dollars that you're going to make, there are a lot of other things that you're going to be responsible for, not to mention driving traffic to a website, blah, blah. So I say just leave it, just focus on Amazon, start there, set up your infrastructure, and then when the time is right, you can look at other channels. And then that's where A2X also can help, right? Because you guys also do the Walmart integration, you have all the other channels. So give us everything else that you are integrated with.
Yeah, so Shopify, Walmart, eBay, Etsy, BigCommerce, and then of course Amazon.
Okay, so any seller selling through any one of these channels, and as long as their website is built with Shopify, you can pretty much take care of everything. So I have one question on that before we move on to my favorite part of the episode. What about the credit card charges? Because Amazon is, every other week, but Shopify settles every day, right? And there is Visa, MasterCard, and all the other payment methods. Do you consolidate it all and then provide the breakdown for the settlements for all those batches?
With Shopify accounting, we provide a payout per what we call a gateway, so per payment processor, basically. So Shopify has their own shop, which is called Shopify payments, and so those ones are paid like every sort of 2 days on a frequency of that. With our other payment gateways, so if people are using other like the POS or other payment processors outside of Shopify payments, we can generate that data daily, weekly, or monthly. So we can consolidate to at a really high level if people just want to do monthly accounting, or we can provide daily entries for customers as well. So we have a bit of a mix between. Sorry.
Yeah, and as far as the reconciliation of those deposits, do you also provide, so I can take the example, $1,000 is sold, you don't receive $1,000, you receive $997.18. So do you say, okay, this is the $1,000 batch, and then this is where it goes with the charges? Do you take care of that part?
Yes, definitely. So like on the Shopify payment side, that will include all the fees that Shopify charge for sellers to use their service. So that will be part of our entries, and those entries sort of just operate just like Amazon settlements do, where you just get a deposit in your bank and you match our entry to the deposit. With the other payment processors, we use a clearing account system. So obviously there can be things charged outside of Shopify for certain other payment processors, and because we connect to Shopify, we don't see that data, and so we will use a clearing account system, and basically A2X will allocate the expected deposit through to a clearing account, and the seller will allocate their deposits that they're actually getting into the bank to offset that clearing account balance. And then if there are some fees need to be charged, they'll account for those outside of A2X. Yeah.
Okay. So it's a lot more complicated because there's all these the reconciliations that's what kills me, because all those control accounts with balances here and there, you never know if it's legit or it's something that hasn't been reconciled. So I'm always sensitive to this reconciliation part.
I was going to just say, I think we've missed kind of talking about how we talk about reconciliation, but talking about where that happens. It's in Amazon businesses or Shopify sellers accounting system, whether that's QuickBooks Online or Xero. So that's connecting to their bank feed, and A2X is sending entries into their accounting system. And that's where the reconciliation takes place. I think we missed that key component.
Yes,
definitely.
The automatic reconciliation is the ideal one. So I frankly always recommend Xero and A2X together, and then get them configured so that way Xero can fetch all the bank transactions and credit cards or whatever, and then A2X fetches the transactions themselves and then put it together and post it to Xero, and then they can get all reconciled automatically.
Yeah.
All right, cool. Well, this is a very complex conversation, but what are you gonna do? You have to deal with it. So now I want to talk about you a little bit because I always want to cover every one of my guests in terms of what their life experience has been like, in terms of what brought them here. And what I want to know is, so let's start with you, Ellen. So you obviously you studied accounting and marketing, and now you are doing what you're doing. But growing up as a kid, you probably had certain things that you've done that now looking back, you can tell, those are the things that I did those days that were already telling people this is what I was going to end up doing. Can you remember what was the connection? So what was the genesis of what you do today as a kid? Share with
As
us
a
some of
kid,
those experiences.
look, I think I've always had a job. So I started working as soon as I could. I started my own little babysitting company when I was very young. But I think in terms of did I see myself ending up here? Probably not. I think I more just had lots of different interests and lots of different disciplines. So I've always been fascinated by, history, accounting, economics, or like a real range of topics. So when I actually went to university, because I also studied psychology, I couldn't like choose one area. I'm like fascinated and love to use both sides of my brain. And so when I kind of, I guess, fell into software, I would say I fell into software. I mean, I feel very lucky that I did. And it was genuinely was, I can use, there's the accounting side of things. I love, being around Amazon and entrepreneurs. It's so inspiring, as well as like being creative with marketing. So I loved that aspect that I could do all of these things. And as well as work, as well as a startup, right? When you're at a startup, you don't just do one thing. You can be building the product one day, or you could be doing a new website the next. So there's so much variation, and I think that's what I loved. So yeah, so that was a long answer to I don't know if I did have any telltale signs.
The answer I'm looking for, this is so standard answer I get. People always, I ask, so what were they like? When was it that you realized first time that, this was looking back, that was the time? They always very quickly fast forward. They talk about their college and then they talk about their job and the current job. I have no interest in any of those things. What I'm interested in is, as a little girl growing up, you must have done some things, asked certain questions, wanted certain things from your parents that were completely in line with what you do today. So it's the same kind of interest. So that's what I want to know. What was it?
I think we talked about this the other day. Hey, Elle, we talked about it. And I think for me, it was, I'm the youngest of three. However, I was the one that was the loner. I gave everything. So I was the one that had the money. And I think that was my thing, from a very young age, I had realized, one, the value of money, because I seemed to have it and they always didn't when they had the same, but they just spent theirs and I didn't. And then the whole, the saving side of things, I think that was sort of half ingrained into me. And I think that connection is where I ended up in this path of accounting. So, yeah, I see what you're saying in that it was, a childhood thing that happened but I always had an interest in this area. I actually did want to be a vet initially, and I did a work placement, and then I realized, no, I don't want to be a vet. And then I wanted to be a mathematician. I don't know. I don't now. I'd soon changed when I became an adult, but it was always sort of, mathematician, accounting, finance, always going to be something numbery, I think.
It's
So that's exactly what I was looking for. So what was it for you, Ellen?
As I think about it now, it probably was going down and so my grandma lived very close and we grew up on a farm. So everyone would kind of mum and dad, had this business and my grandma lived on the farm with us. And I used to love balancing her checkbook. So there you go. I've been reconciling numbers from a very young age and I could actually see like, okay, this money was spent here and this is exactly when this check cleared. And so I used to manage that. But that's the accounting side. Where did I come with the creative side? Maybe I don't know, love of baking cakes. That's happened from a young age that I used to then sell at garage sales when I was a kid.
Yeah.
So what was it that attracted you to balancing checks?
Well, I think about now I quite like and then as well I just love when everything's in order and things are accounted for. There's no kind of ambiguity, so I love that, and I also would find it very satisfying when everything lined up. Like I like there to be kind of a definite answer on things. That's my kind of one side of my brain.
Okay, so I belong to an organization called Entrepreneurs Organization, EO, and we often do presentations, and not often, regularly, you present a challenge you have, and then you have all the forum mates give you their take on it. But before the presentation, you get coached by another forum mate, and there is a methodology to it. So what we say is, to really get to the root cause of something, you had to ask the question why 7 times. So I just asked one why. So I'm going to ask my second why. Why having things orderly was so important to you?
I was not prepared for this. Yeah, gosh, I've never really thought about that. Like, I just like. Do you put this on the recording or is this for us?
No, this is why do you think this is my favorite part of the episode? Who cares about Amazon, right? This is what I mean. We are people, we are human beings, right? And we get up every day, we do what we do, we don't think about why we do it. But really, when you stop to think about why in a meaningful way, and why, then you know why you're doing what you're doing. I'm always fascinated by the answers.
No, of course. Do you know, if I could like be very vulnerable, I think sometimes it actually can be a bit of a problem because I think I can think in quite absolutes. It's just how my brain works sometimes. So I want things to be tied up neatly in a bow, which is not obviously always the case in life. And so when there's opportunities to have that, and whether that's finances or numbers, and there's a definite answer for something and something's accurate or it's not, that just sits really well with me.
I'm going to share a quick story. I had one of the large agencies CEO on the show, and we obviously they're full service Amazon agency, and we started talking, but the subject very quickly became company culture. And we started talking company culture. Okay, how do you create a culture in this virtual environment where people are working remotely, blah, blah. We're talking best practices because everybody hires remotely these days and culture is key. So I said to him, why is culture so important to you? He said, it's the team. It's the teamwork. That's what I like. And I want to build a team. That's ultimately what it is. It's not about Amazon and I love. And then I said, okay, why team is so important? You know, you can do things on your. So anyway, so that why? And then it turns out, and this is ultimately what he said, well, I never thought about it this way, but you know, this is the reason. As a kid, he played basketball and he loved winning. And they would win all the time. But playing basketball, he could never win on his own because it's a team sport, right? So he had to be in a team, but it really was not being in a team that was driving him. It was winning. He's a very competitive person. And so I said to him, so you made culture key for you because you just like to win. And that's the driver. It's not the team. He said, you know what? You're right.
Yeah. Yeah.
So Iona, what is it that pushed you to become the money person? Why? I mean, you said you were youngest of three, right?
Yes. Youngest of three. The most responsible.
Usually the youngest ones are, I had a younger brother, and I had to take it the hard way, and then he always inherited all the luxury, everything. I could never drive the car, and nobody would give me, my parents wouldn't give me the car, and he would just take it anytime. So young ones are usually the spoiled ones, the ones that have it easy. And here you are, and you are the one who gets put in charge of money. Why is that?
I think it was a bit of that, to be honest. Yeah, while I am the responsible and the money one, I also was the baby very much so. I had all of those things that I could do and the sisters couldn't do. And, but I just think my very young years were with just my dad only. And I think the influence that I had there from him, which is very regimented, is the difference between myself and then my other sisters. So, yeah, I think it's that regimented lifestyle that I sort of had right from the very beginning, and that is made an impact of me. Same thing. Like, I like to make sure everything is checked off and everything balances and everything's under control and all of those sorts of things. So I think that is where it stems from mostly.
So you know what, this tell me if this is something that would apply, but that regimented lifestyle, it's structure, right? So structure usually inspires trust. So people get to trust you more. So you were the most trusted in the family, and they said, she knows what she's doing. She's not gonna, she's not gonna go do crazy things, and therefore we can trust. So I guess, so do you think that would be the case?
Definitely. Yes, definitely. Yeah. Without a doubt.
Well, it's fascinating. This is what's different about Amazon Legends.
Yeah, gosh.
That is. It's
great. We can talk business all day long, but this is much more important because, this is obviously my podcast. I feel for it, but the reason why I started is nothing to do with Amazon. It's all about how a human being that is usually risk taker, visionary, endures all the difficulties and the learning that's required and the emotional strength they have to have. How many times I've had my account suspended when I was relying on the settlement that was going to hit my account that suddenly doesn't arrive, and I've got payroll, and getting through those situations. This is not about selling on Amazon. This is about a lifestyle, and the stories are not told, and you don't get to really see the people who can do this. And that's what I wanted to do with this podcast. And of course, we share the knowledge in the process, but this is my favorite part. And thank you for, taking part in it.
Oh, it's great. Yeah, no, I'm super grateful. I think it's great to do this at the end of a podcast like this. Keeps it real.
Yes, exactly.
Yeah.
Thank you, Nick. We'll ask each other 5 more whys offline to really get to the
yes, I mean, I'm glad you noticed. I didn't ask any more than to say.
I think I'd start crying.
I did have guests actually ended up crying. Not ladies. Not ladies.
No, I think I could see that getting quite vulnerable when you really stop and think about where you've come from, why you are the way you are, and different influences.
Yeah.
But yeah, and you got a raw answer.
That's what you call authentic, right? So that's what we
Exactly, yeah.
want. All right, cool.
That's it.
So tell us, what is the best way for sellers to go sign up? And also, by the way, I want to announce here, so we've got a fan club, Amazon Legends fan club, and you guys also are sponsoring that, one of the sponsors, that there is a giveaway there. Tell us in general, how can people sign up? What's the best way to do it?
Yeah, totally. So the best way to sign up is just to go to a2xaccounting.com, and you'll see that you can try A2X free. So you'll click on that, and then it will come up with your sales channel. So you'd click on Amazon, and you basically connect to A2X, and it's safe and secure. It will never make any changes to your Amazon account. And there's just step-by-step instructions on exactly how to get started. And I know you mentioned the support, but the support team are amazing, and they're there to help you. There are also, if you did actually want to speak to someone, you're very welcome to email myself at ellen@a2xaccounting.com, or reach directly out to support. That's the easiest way to get started.
Great. And there's also one other thing that I want to say. When they look at the pricing, you have your pricing for Shopify, Walmart, and Amazon. But if somebody has multiple channels, then I always found that reach out and just speak to one of you guys through chat and say, look, I have several channels, and then you kind of have a consolidated pricing, which is much more attractive. So don't make the mistake of adding up for each channel is going to cost so much, right?
Yeah, exactly. You can sign up for a multi-channel. Again, I think you mentioned a lot of people are just on Amazon, so they can get started. I do think about, like the price of A2X will pay for itself in just having accurately reported income and all of these other things that you'll get to see. So yeah.
I'm going to give you one more perspective about the cost of A2X. A2X costs so much per month. But what is the cost of not having something like A2X or A2X? That's far greater. So not knowing your numbers is not acceptable, especially in Amazon operations. So that's a given.
Yeah.
Thank you very much. I love the conversation, and you already know what part I love the most, but I think we put a lot of things on the radar screen for Amazon sellers, and the structures that we shared definitely works. And thank you for being here.
Thank you so much.
Thank you. It was really good.
Before I go, a quick reminder to say goodbye to your cash flow problems and claim your extra $1,500 when you qualify for $25,000 or more in funding. Go to www.runviably.com/legends and start your application today. Thank you. And this brings us to the end of another episode, and I'll see you on the next.
If you enjoyed today's episode, be sure to subscribe, rate, and review the episode, and share it with someone you think would benefit from it too.